Hello and thank you for joining us with this video on understanding Phi Kappa Sigma's insurance and risk assessment allocation methodology. Before we begin, we just want to make note that the following descriptions are a summary only and are not intended to serve as a substitute for the actual insurance contract, insurance program, or risk management policies of the Phi Kappa Sigma International Fraternity. Some of you may be wondering, why do we even have insurance? Well, we all know stuff happens, and this insurance protects the local undergraduate chapter, its officers and members, House Corporation, Alumni Association, and related educational foundation, as well as fraternity-appointed volunteers, from claims related to bodily injury and property damage occurring out of the chapter's operations. It also protects against claims arising out of libel, slander, false arrest, invasion of privacy, eviction from the premises, consumption of food and beverages, as well as incidental malpractice. Others of you may be wondering where your insurance and risk assessment payment goes. First, general liability insurance. This is coverage that pertains, for the most part, to claims arising out of the chapter's liability for injuries and damages caused by property ownership, contracting operations, sale or distribution of products, the operation of machinery, and professional services. It also goes to directors and officers liability insurance, which offers the directors and officers protection from personal liability and financial loss arising out of wrongful acts committed or allegedly committed in their capacity as officers and/or directors of the fraternity. Commercial crime coverage is for the employee dishonesty by officers of the undergraduate chapter, House Corporation, or Alumni chapter. To avoid the possibility of crime claims, all chapters and House Corporations should be diligent to take certain actions, especially regarding their financial operations. The Member Accident Protection Program is a benefit of membership, which covers all active, recognized United States undergraduate members and new members that meet certain criteria. This coverage is intended to complement health insurance you should already have through your family or other arrangements, and it is not a substitute for primary health insurance. This is a supplemental, accident-only protection and does not provide any protection for medical costs arising out of sickness. Headquarters property insurance is also supported by your payment. And finally, it helps with the educational resources and programs offered to our chapters and members. One of the first things you must learn is that the fraternity only receives a single bill with one due date for all of our coverage, which is for the entire fraternity, its chapters, and members. Having only one bill, we have developed this methodology to allocate our insurance and risk assessment costs across all chapters, using an approach that encourages good behavior and deters poor behavior by chapters. To address these behaviors, the fraternity has categories for offering surcharges and discounts. Risk history. Chapters that have a history of risk may very well have developed a culture of being risky. When consistently exposing themselves to such risk, they are also putting the entire fraternity in jeopardy. Property management. Property, whether it is owned or leased, can pose a substantial risk to the chapter and fraternity. Proper care and precautions decrease the possibility for a claim to be made. Chapter performance. When a chapter displays proof of its understanding of the rules, it is less likely to create that risky environment. And finally, chapter participation. Similar to its performance, when a chapter engages in learning the policies and procedures, it is less likely to create an environment of risk. The base rate, or starting point, for all members is first calculated by taking the overall bill and dividing it by the number of returning members the fraternity expects to have. We then begin by using some basic math for two aspects of each group that will be billed. The billable men component is what could be considered the per man value when calculating the chapter's allocated cost. The adjusted rate is the change to the base rate after considering all surcharges and discounts based on a chapter's actions. After all of these calculations have been done, we check to see if the projected total amount invoiced to all of our chapters is at all under or too far over our anticipated costs. And if so, we adjust the base rate and begin the process again. The following surcharges and discounts towards the base rate are key to controlling a chapter's allocated portion of the insurance and risk assessment. More information can be found on the fraternity's website detailing the specifics of each item and how to take necessary action. The remaining part of this presentation will give a high-level overview of each category. When a claim or lawsuit is brought against the fraternity, chapter, or its members, it puts a strain on our insurance and risk-related expenses. If a claim is paid out, the cost of our insurance is likely to go up and will remain higher until that claim falls off our recent record. Therefore, all claims made during the last 5 years against the chapter or its members above the thresholds listed will be assessed a surcharge of 25% on a per-claim basis beginning the following fiscal year. Chapters placed on probation will be assessed a surcharge of $50 per member at the time of each infraction. A strong history of good behavior should be rewarded. Unlike the surcharge for being on probation status, chapters that build a history of following policies are rewarded with a cumulative discount. For every year without being found responsible for a show cause incident, the chapter will receive a discount. 2 years without being found responsible is 10%, 3 years is 15%, and 4 or more years is 25% off the base rate. However, if your chapter is found responsible, it will go back to a year zero for the following year. As we previously mentioned, chapters with property pose a potential risk. The fraternity has identified chapter property using one or more of the following criteria. Are there Greek letters and/or a fraternity flag on the exterior or visible through windows? Do chapter activities such as meetings, brotherhood events, social events, or recruitment events take place there on a semi-regular basis? Are chapter memorabilia prominently displayed in the common areas of the property? The fraternity has also identified that there are 2 types of property: residential, which receives a 25% surcharge, and non-residential, which only receives a 10% surcharge. Chapters whose property participates in the fraternity's property insurance program are afforded adequate coverage for their property. By utilizing the same provider, our chapters support this cost-competitive amount for the most comprehensive coverage limits and indemnifications. It also ensures maintaining the benefits of property assessment for replacement cost coverages through an inspection program. Therefore, chapters requiring property insurance coverage but are not in this program will receive a 5% surcharge to cover administrative costs for ensuring these thresholds are met. Keeping chapter property safe, clean, and maintained is essential to decreasing risk. For this reason, all property utilized by chapters, regardless of the owner, are to be inspected at least every 2 years for life safety concerns. The rating and response of your chapter will help ensure a safe environment for all. If you have questions on your chapter's property inspections, please contact the headquarters office. You could be receiving up to a 20% surcharge or even receive a 10% discount. Properties will also be assessed a $250 fee to cover the cost of a property inspection every other year. However, chapters already participating in the National Property Program will have this fee waived since they are already receiving an inspection as part of their participation, and the information is easily shared with the fraternity. Successfully meeting the Mitchell chapter standards shows that a chapter understands and can operate on foundational elements in running an organization. By doing so, They should be able to avoid basic aspects of risk. To deter poor performance, chapters that do not pass Tier 1 of MCS receive a surcharge of 10%, while chapters going above and beyond full completion of Tier 1 through Tiers 2 and 3 can be rewarded with a discount up to 10%. Being able to identify risk behavior early allows intervention opportunities. For this reason, chapters that submit their MCS reports on time for each quarter are eligible to receive a 2.5% discount for each quarter that is completed at 100% when all previous quarters have already been submitted completely. Chapters that maintain a strong focus on academics have been shown to be less of a risk than chapters that do not. A scale of surcharges and discounts has been established to deter poor performance and reward strong academic performance, with surcharges of up to 15%, as well as discounts up to 15%. Chapters that utilize fraternity resources to educate their newest members are rewarded with a discount, even though it is a requirement of our new member education. And the chapters that do not successfully use this tool receive a surcharge for their inability and lack of commitment. Chapters that do not receive a 90% completion by their new members will receive a surcharge of 10%, while chapters that achieve completion by all new members will receive a discount of 10%. When members accept their contributions to the chapter's well-being, they are taking a step in the right direction. The easiest form of this is having members fill out and submit a membership agreement to the fraternity. Chapters who do not submit membership agreements for all new members prior to initiation receive a 10% surcharge. Chapters that do submit all of them will receive a 10% discount. A strong financial background usually indicates that the chapter understands the need for promptness and responsibility. For this reason, chapters who carry any debt to the fraternity receive a surcharge for this behavior. Surcharges range from 5 to 15%. Participation by a delegate in the Grand Chapter Convention represents the chapter's commitment to the fraternity and what is at stake as to the governing of all of our actions. Failure to send a delegate reflects poorly on the chapter's involvement, and as a result will receive a 10% surcharge. As our flagship program with almost 20 years of history, Men of Honor helps shape attendees in the areas of moral and operational thinking. Chapters that have a proportional number of members attend increase the likelihood of intervention to risk. Therefore, chapters that do not send a satisfactory number of members will receive a 10% surcharge, and chapters that send at least 1/10 of their membership will receive a 10% discount. The Carroll Simons Institute is a newer program from the fraternity, and it focuses on a vast array of sound operational techniques from experienced undergraduates and alumni. Sending a participant to this program can help in addressing all of the previous items covering our assessment methodology. As such, it is a step in the right direction and is rewarded with a 5% discount. Feedback from chapters indicates that a two-payment option is a definitive benefit to their cash flow processes. The two-payment option must be requested by emailing staff@pks.org before October 1st. You will then have to make a payment of 50% your initial bill and an additional 4% interest by the November 1st due date. Failure to do this will result in a severe punishment, fines, or even the possibility of closure. The remaining 50% of the initial bill will be due on February 15th. If you are wondering where the additional 4% interest comes from, it is based on a 16% per annum market rate and is intended to offset any interest occurred by the fraternity if taking out a loan to pay off the remainder of our insurance and risk assessment related bills. Remember, the fraternity receives a single bill with one due date from our insurance, even though we offer chapters a two-payment option. We sincerely hope that this video has helped you understand the basics of the fraternity's insurance and risk assessment allocation methodology, and that you can begin to identify the areas where you can take action to reduce your chapter's assessment. Remember, the safer we are and can prove to be, then the cost of our insurance and risk-related expenses will lower over time, bringing benefit to all of our undergraduate members.